The stock option trading strategies for the tactical trading method are based on the following combination of trade types: underlying and or synthetic option trades that are done to capture directional price movement, and option selling strategies that are done as counter trades on price failure at resistance or support. This Facebook chart and trading video discusses the setups for 2 directional stock trades along with the entry timing for 2 counter option trades. Of particular note is how this stock option trading strategy combination works so well together. Consider blue dot 2 on the chart. The short put long call is a synthetic long. That protects the Facebook stock short from the red dot. Now, if price continues to go up after the synthetic long is done and the short is exited, which is what ended up happening, that option synthetic makes you long instead of hedged. But if the move had continued to go down after selling the put, the stock short would cover that option sell. So you can see how the combination strategies can protect the risk of option shorts and or underlying trades. And our option selling strategies are also done in a way that reduces risk. These counter option trades are done in units of 2 shorts that are later completed with 1 long. So at the 2 blue dots marked on the chart, there are 2 short calls and then 1 long call purchased, along with 1 long put and then 2 short puts sold. This type of trade is a ratio option short. Now, trading into ratio option shorts like this still gives an option credit, but at reduced risk than naked shorts only, because of the way the break-even ranges for the shorts are increased. So let's go over the different prices and trades marked on the chart. You are looking at a 60-minute chart of Facebook. Resistance. There was a swing high that broke out to higher highs and then needs to shift to support to keep the swing resumption intact. But when price breaks below the price line marked resistance again, that price shifts back to resistance. Support. Now this price was another swing high breakout, but unlike the resistance price line that didn't shift to support, you can see that this price did, and so it is still support on any retest. The yellow square. This is the point on the resumption swing where you knew it was important for resistance from the previous high, which is 44.80, to shift to support. The blue dot 1. You can see that 44.80 doesn't become support. And when it fails to hold, coupled with the momentum extreme indicator cross, and go ahead and look at the window below the actual chart and price bars, you can see that yellow circle. So that is what I'm calling a momentum extreme. That's the name of the indicator, and it crossed, okay? At that point, a call is sold and a put is bought. So this is a counter trade that would participate on a directional reverse, but it's also a trade that would protect profits from a previous buy that was already open. This is an important characteristic of the combination trading method. At the red dot, you are looking at a method directional sell setup. The key components to this trade setup include the resistance, reject on retest after the initial reverse. Okay, at the blue dot, this stock is going from a buy swing into a sell swing. That's the initial reverse. So after that happens, you can see a retrace back to the yellow line. It rejects, so that's the reject on retest after the initial reverse. Now, this reject is combined with MEX flow. And look at the blue dot, the blue box, or the blue box number 1. Those blue and purple lines are a momentum indicator that we call MEX. What MEX flow means is on the retrace up or back to resistance, you can see that the MEX indicator is still flowing down. And we like that as a component to a sell setup. To be able to see momentum still going down even on a retrace. So we want this to continue in the direction the trade will be on a retrace preceding the trade. Blue dot 2. Now the Facebook sell has gone to support and held along with a momentum extreme indicator cross, and this time look at yellow circle 2. So what do we do now? We take a partial profit on the short. We reduce size because this is support and it is hitting with an extreme in our chart read for momentum. Besides taking a partial profit on the trade, this timing is used to buy a call and sell a put. And this again is where the stock option combination trading method that has directional setups with counter setups works so well. Okay? So, as we discussed before, that short put, long call is the equivalent of a stock buy. Okay? So it's an option synthetic long. And that's going to protect the profits in the remainder of the Facebook short. Okay? So we're hedged right there. In this case, and you can see it on the chart, price went up. And as price went up, a trailing stop was taken on the short. And as soon as that happens, that synthetic long makes you long. Okay? Also understand the way this trade was done, what I discussed about the ratio shorts. Where you see minus C plus P, that was done in units of 2 call shorts for 1 put buy. So it was done at a credit. When you go to blue dot 2, you're going to buy 1 call. So now you're short 2 calls long one call. That's your ratio call short. As well, you're going to sell 2 puts against the 1 put you bought, and that's going to give you a ratio put short. And as I already mentioned, the method wants to trade into option ratio shorts like this, still get an option credit, but at reduced risk than naked shorts only. And just to explain, let's say that you sell 1 call, okay, for $1, and it's a, let's call it a 46 call, and you sell it for $1. So the break even is at 47. Now, let's say that you're trying to set up a ratio short. So you're going to sell 2 of these calls at $1, again using the 46 strike. And at blue dot 2, you're going to buy a call at the 43 strike, and let's say that cost us $1. So you've sold 2 for $1, you bought 1 for $1, so you've got a $1 credit on your trade. But instead of having your break even at 47, the math of a ratio short is to take the short strike and add the width of the spread. So in this case, the short strike was 46, long of 43, short the 246s, that's a spread width of 3, so you go 46 plus 3. If you sold your ratio short for a credit, you get to add that to increase the risk break-even range even further. And if you had done it for a debit, and the way we trade these, by trading into the long after having already done the short, or trading into the short after having already done the long, we're invariably getting credits on these trades. So in this case, you got the 46 short strike plus the 3-point strike width plus the $1 credit, and now instead of having break even at 47, your break even is at 50. 46 plus 3 plus 1. So that's why I love this strategy. You know, I'm not the person that believes in just doing a bunch of naked option shorts because, you know, we're told that X percent of them, I hear the number 70% all the time, expire worthless. And that's great, but it's just not for me. Because that 30% can lose so much more money than the 40%. And it's just not the way I want to trade. I want to be able to decrease the risk, but still be able to do short option strategies and get credits for them. Okay? The last trade done on this chart is the green dot, and this is a directional buy setup, and shows another important aspect of the combination strategies and ratio shorts. Price moved past the call ratio short break-even point, and if you could see to the right of where this chart ended, price went a lot higher than the 47.50 that you can see. This swing did not end there. However, by doing the stock buy, the short call in the ratio call short is covered by the long stock. And again, how we can do short option strategies, but really be able to either decrease risk or in, many cases, actually be able to eliminate it. As far as the key components to this trade setup, we have what I will call a price resistance failure setup. Still looking at that yellow line as resistance from the point of the blue dot. You can see how price goes to that line and then it breaks through it. Okay, so it's really not being acknowledged as resistance. But when it breaks through, where does it go? Goes just about to the previous high. And those two yellow squares make a double top. Okay? From that double top, price comes back to that yellow-blue line. That price fails, okay? Meaning that after it breaks and goes back through it a little bit, it doesn't shift to a resistance price like what we saw at the red dot. Instead, it fails, okay? It breaks. The failure break setup is with MEX flow. I explained that to you on the cell and the blue square 1. Now look at blue square 2. You see that same situation where there's a retrace after the double top, but MEX and momentum, what we call MEX flow, is still going up in the direction of that potential buy setup. The entry is into those two yellow squares that I mentioned, but now they're a triple top breakout, and that's a continuation pattern in this method. So there you go. Our stock option combination trading method got to look at two stocks that were traded directionally, two option pairs that were traded counter, the way those strategies work together. And then when we end at this green dot as our last trade, and let me end this video by again mentioning when this trade did break out to higher highs. Again, remember that short option protection aspect of these stock option combination strategies. The short call was covered by the long call buy off of support. But if it wasn't, this buy would have covered the short call. And why is that significant? Well, what happens if this is expiration day and you're taking trades where, and we do this all the time, where we might sell calls and puts a couple weeks in advance, but buy calls and puts the previous week. So, for a number of days, the options are covering each other. But we're going to lose that coverage on expiration, and I am talking about weekly options, by the way, I should mention that, we get the stock buy, and that will still cover a short that's not going to expire for a week when you lose your long call protection.